I thought it would be a good idea to just look at the sentiment for some of the indices, and I'll go through some of the FX pairs as well. Um, what's currently trended on Twitter is the coronavirus. So just wanted to put things into perspective and how things are with the sentiment. So the US 30, the Dow Jones Industrial Index. So I'll put the 21-day moving average on a daily basis. Historically, they've been bearish, and they continue to be. But there is a slight uptick, and that's what I was saying on our dashboard, is that ideally we don't want this to continue to go up. If it does, then it becomes a sell. So there's your 50% line there. And what will probably happen is that when we get close, there'll be a news event, and that will cause them to be fearful. If this coronavirus isn't making them fearful enough, they'll probably have to invent another thing in order for people to start selling. So if we go back in time, go all the way back. So we have to go back here to 2018, Christmas Eve. There you go. So what will happen now? We'll have a sell-off, perhaps inevitably, and then there'll be a scary story, and then they'll sell in a really big way, and they'll continue to hold, and the news stories will persist. So this is very likely North Korea, the news event that started this, and then they probably invented more stories as we go. There would have been one there, and here we are right now. So we're entering the coronavirus scare story. Obviously, the Iran news didn't actually affect anything really on the sentiment with the Dow Jones Industrial Index. So yeah, so the 21 days here, we just touched it. We closed. Yeah, that's the low, and this is the average long. This is the average short. So all those bears that held on, while it went above, they would have been, a big drawdown. And so the resting zone, the happy level, is between these two values. So I'd imagine it wouldn't drop below that because the bears shouldn't have a profit, and it shouldn't go above that. The bull shouldn't profit. So we'll find ourselves within those two levels. Hopefully you can see that 28,397 and 29,113. 21 days pointing up. You've got the Elliott wave oscillators green. Certainly the sentiment is a buy at the high level, but perhaps over time, very slightly less of a buy. But this coronavirus is probably what's going to happen. It's going to go like that again. All right, they'll sell. What happened to price? It will continue to go up, and that band there will inevitably grind higher over time. And I think the only thing that's going to cause it to really fall is like a World War III scenario. As long as everyone remains fearful, it will continue to go up. Just a little eye on that over this week, and I expect a little bit of a sell-off, but between those two values. And we'll look at that US 500. And yeah, so same sort of thing really. We have to go back in time. If you remember, it was Christmas Eve. This one was Boxing Day 2018, and they sold it in a big way, and it shot up. So yeah, so we had to have something really scary for that to happen, like a North Korea situation. And that was just what they wanted for price to come up, was a scary news story, because everyone sold, and they continued to pump out the negative stories, scary stories, and keeping everyone fearful. And here we are right now. So that's the US 500. I'll just do perhaps UJ. I'll do the dollar yen, and then we can finish up. Just really just to show you at a high level where we are. Not too long video. Okay, so UJ is a sell. There's a flash crash. So this is one of the reasons why our dashboard could potentially be risk off, because of this. If it continues to go like this, then it will become more of a sell. We're below the 21-day. I can see it drop a couple of hundred pips. The wave oscillators still, it's positive, but it's slightly coming down on the daily basis. And you see maybe my tweet, I'm not sure you would have seen it, but I think there's 80,000 retail positions went long since Monday. So that's quite a strong bias. They're obviously counter trend traders, these retail guys. So perhaps a little drop because it is a sell at the high level and it's a sell over time. As you can see there, it became a sell the third, what's that, the 22nd? So 4 days ago it became a sell. So with that, they hold on, then it becomes more of a sell. So yeah, just a quick video really, just to keep an eye on this FXCM trading station. It's invaluable. We'll know when the crash happens because all we're going to do is just look at the sentiment. And so when it goes into neutral, which we'll see on our dashboard, they would obviously then want to check this terminal to see what the retail are doing. If it peaks and it comes down, then you'd want to buy, because look how the big picture, if we go back in time, how much of it has it's been a buy. There's 2016. So if you would have bought that dip, there we go. That's 13,000 points higher had you have bought that dip there. So keep an eye on this trading station. It's absolutely valuable. And yes, I'll just wrap up a quick video and I'll do the COP report now. And yeah, so have a good weekend and I'll speak to you guys later.